All right. Very good evening to all our mentorship traders. We are on our Friday night session, which is today, the 12th of Feb 2021, 9 p.m. Indian Standard Time, the Mentorship Invest Meet. A very warm welcome to everyone and our new joinees in our community. We are going to talk about the Nifty, the Bank Nifty, few sectors, and then straight away go about few stocks which have met our investment criteria for a prospective buy next week. But before that, what is the Nifty trying to do? If you look at the weekly charts, we have a flattish kind of a positive close. We had a stellar of a bounce back last week, and now let's call it consolidation. If you shift most of the weekly charts, the sectoral weekly charts, and most of the large caps, you will definitely find price momentum divergences across the board. Now, they might lead to some consolidation, but I seriously doubt whether they will lead to any significant reversal or not. So weekly charts or medium to long-term charts are, I would say, intact. They have gone up significantly, and so they are slowing down. That's completely normal. On the daily chart, you would see again those similar kind of intermediate divergences shaping up. And most of the information I have it is on from the 75-minute time frame. Now, this is the 75-minute time frame here on the Nifty future. It's on the edge of a short-term rising channel. If you see this rising channel, this red one, I have it drawn based on the RSI 9, and it's been hitting the base more than a couple of times now. In fact, today's bounce back also came in from this channel border. A close below this red channel on the downside will definitely trigger some amount of weakness. There's no doubt about it. And more or less the vertical distance of this channel, if you allow me to just keep in mind or just mark it somewhere like this. If at all we get a breakdown, then we can probably see a vertical move of the height of this channel, which can take us close to these levels of 14,800, 850. But that's too early to comment on. The first trigger for any kind of weakness will come below the daily lows. Okay, let me get rid of these lines. So if you look at the last 1, 2, 3, 4, 5 days, it has been completely range bound and consolidation. So any degree of weakness, the 15K mark, I think, is going to play as a very important level. It's going to be a psychological level also, which can, a break below which can definitely confirm some further weakness. We had supports coming in from 15K. The last time we got this short-term correction, intraday correction, it was a rising gap. And there has been shift in the point of control. If you look at the kind of volumes that has happened over the last, these number of bars from the low to the high, you'll notice that 15K and 15,200, this 200-point range has seen a pretty decent amount of volumes. Now, such volumes after such an exceptional run-up and such volumes happening when the markets are range bound generally suggest towards distribution. Not always, generally. So I would suggest you to be a little careful and cautious on the long side. If you have traded long Thursday, Friday, or maybe Wednesday, Thursday, Friday, you would have seen that barring few runaway counters, most of them have slipped from their day's high. And you would have done good if you had booked some profits or protected your profits. And so that is going to be the norm going forward next week. If you're going long, make sure it is very short-term in nature or very, very long-term in nature. That is, even if it comes down, you're fine with it. Levels 15K is on the downside. Short-term quick would be this red candle's low. If you're looking at Monday's levels, let's say 15,070, but it's the close below 15K or a breach of 15K, which I feel will definitely set in some price weakness for sure, and that will bring us down to close to 14,800 for sure, which is this high and this low. The confluence of this high and this low, bare minimum, is what I feel. On the upside, I've been writing that 15,200 needs to close about that. So now it's been confirmed because every time it has gone close to 15,200, it has reacted. More or less the central line of this channel. So once we get a close above this, I think the sentiment, the emotional quotient of the market will definitely turn on the upside for the grounds, for the rally. Bank Nifty, similar consolidations. You could definitely see this. This is a 75-minute chart of Bank Nifty. Very, very similar looking, high volumes happening at the top, consolidating over here. And so the last time we got a bounce back from the 35,500 kind of level. So 35500, 35500 is the level to watch for the Bank Nifty. I like the daily chart. So if you allow me, I can just quickly change this visibility so that it doesn't bother us. Now we've got quite a few interesting channels over here on the daily chart of Bank Nifty. We've got this green channel breakout, number one. This red channel rising was a steep move that we had during the November, December last year. And the market, the index right now is facing resistance from the lower border of this red channel. You can clearly see this. So I've kept these channels. We've got 3 channels here. And if we see some amount of correction, then this green channel upper border will definitely act as support. We'll be cautious, we'll be careful. Again, similar 5 to 6 days of consolidation, one beautiful spinning top kind of a pattern, followed by small spinning tops. This is a shooting star, I'm sorry, followed by 3 spinning tops. So consolidation, break below 35,500, and we can see some amount of weakness. The overall trend of the index is really nice. So I'm not going to sound extremely bearish, neither will I suggest you to go extremely bearish and exit the market. So we'll be rather looking to buy on a dip than to pick a top. I think that'll be far more prudent approach going forward. I now shift to the stockcharts.com dashboard, wherein I have the RRG charts. But first, I'm taking a look at the percentage behavior of the sectoral indices. Small cap, IT, real estate, and mid cap, then infra are the main gainers. Now, small caps and mid caps are outperforming the Nifty by quite a decent margin now. If you look at here, a 3.8% move from small cap, you got a 2.2% move from the mid cap, which is outperforming the Nifty by quite a margin. And the Bank Nifty private banks are more or less in the same zone. Underperformers, you have the metals, not much, but the key underperformers are over here. You have the pharma, you have the media, which was primarily due to the sell-off in Z. You have the FMCG, Hindustan Unilever, trying not to fall any further. And then the PSU banks, which were on a roll last week. This is quite a divergence, I would say, the kind of performance that you have here from the PSU banks and the private banks. So it seems that the markets have decided that it's time to book off out of the PSU banks and the momentum that recently we saw. But overall, if you look at the top 1, 2, 3, 4, 5 sectors, barring IT, the rest of them do not matter so much, right? IT, of course, it matters. We had a very good move. And energy, this guy, picked up primarily because of Reliance. Now, I would definitely want to take a look, as we always do every week, in terms of the tails. Now, real estate still doing good. PSU banks, we should look to buy SBI on dips. There's no doubt about it. Auto, please take a close look next week. Auto is gaining momentum on the leading sector, which means keep a close watch on M&M, keep a close watch on Tata Motors, keep a close watch on Maruti also. If you allow me, quickly, if I come here, and I have all the sectoral indices created, so I can take a quick look for you here. So I'm not going to go into auto ancillaries. I want to go to go into the real pure play of the two-wheelers and the four-wheelers. Bajaj Auto has an exceptional run, so I think it's going to slow down. So if you take a look at Hero Moto, but it's more about M&M. It's more about the M&M creating very small candles, consolidating the range, looking for a breakout. Tata Motors creating a pennant pattern, very short-term pennant pattern right over here. So these stocks are likely to show some strength. Maruti, on the other hand, has been underperforming because of this sharp sell-off. It's gone into a range. So the breakout needs to be watched for, this breakout. This breakout. So auto definitely showing some strength. So we'll see whether it performs or not. We had a great run. And then we have the improving, and in the improving we've been talking about the FMCG and the consumption for quite some time. Media, public sector enterprises is there, but primarily I think it is FMCG and consumer consumption play continues. So Hindustan Unilever has definitely underperformed, but ITC has outperformed. So keep a close watch on both this space going forward, because generally when we find a sector coming to the improving quadrant like this, okay, it will eventually go there. Eventually, it might take some couple of runs like this and then go, but eventually, ideally, the theory of RRG suggests that now that you've got some momentum going, what you need is relative strength, which means that it should start to outperform the market. We keep a close watch on that. Weakening, we've got the metals slowing down the momentum. We've got the bank Nifty and the private banks. That's primarily because of the 6-tick consolidation that we have seen recently. IT is also consolidating, but you see it's picking up momentum. That is primarily because of the stocks which has given us short-term breakout recently. Let's come to the IT stocks. Take a look at Infosys. Nice move that it gave today, but fizzled from the day's high. But we got a pretty good move there coming in from Infosys. HCL Tech also gave a move, but it fizzled down. Tech Mahindra gave a pretty good move. Again, it's same thing. It fizzled down from the day's high. That's exactly what I was saying, that if you're doing short-term trades, keep the length of the duration of your trade as limited as possible. So IT did move a bit, but it couldn't hold on to the grounds. Now, last time we spoke whether IT is going to go for a complex correction or not, that is more than two-legged, because recently all the corrections were one-legged. So we need to be a little careful here. We'll see that whether it actually lands up in a two-way correction or not within the IT space. Considering the fact that we are going to go cautious, careful in the market, we'll look to buy those sectors and those stocks which had shown strength. I will not hesitate to buy an ICICI Bank on a dip, or an HDFC Bank or a State Bank. Go for those stocks which have shown strength. ITC sell off really hard today. The stock was at pretty good support, but then it didn't manage to hold into that, and it actually broke through this level, which is close to the 220 mark, with a gap down, broke through with very high volumes. So this stock will probably consolidate and find some support going forward. Hindustan Unilever is creating a base now. If you look at the others, Britannia is coming off for quite some time. So this space has been underperforming. Jubilant gave a beautiful breakout today and then fizzled completely from the day's high. So it's all over the place, but I think that FMCG consumption, we continue to short-term trade, continue to look for opportunities, no doubt. And let's focus on the banking and financials, because those are the ones which led the market up. Those are the ones which are slowing down. Going forward, I think on a dip, we should focus on that space as well. So that's about the markets. I'll quickly request you to start interacting with your questions, and I'll now share the list of stocks which have come in today's radar, this week's radar, for possible investment. All right, so let's